discount expense is where the business gives a debtor a discount to settle their account. So assuming the business made a credit sale to a customer and gave them an invoice of $200, sometime later the customer paid that account and we gave that debtor a discount of $5. So they've settled their $200 invoice by paying $195 cash and being given a $5 discount, and we're going to call that an expense. But why in fact is it an expense? So to answer that, we're going to need to go back to the definition of expenses. So expenses are outflows of economic benefits or reduction in inflows. They've either got to decrease assets or increase liabilities, and they must have the ultimate effect of decreasing owner's equity. So taking a basic expense that we've dealt with many times, that's $200 paid for wages. We'd have a debit to the wages expense ledger and a credit to the cash ledger. But why is that an expense? So to go through the definition, it's an expense because there's an outflow of economic benefits in the form of the cash that's been paid. There's a decrease in assets in the form of the cash at bank asset account. And lastly, there's a decrease in owner's equity. Looking at a $5 discount given to a debtor off a $200 account, why is that actually an expense? So to answer that, we're going to need to look at the situation if this debtor paid us back without getting a discount. So on the left, we've got all the inflows of economic benefits that we'd get if we didn't give a discount. So with no discount, that debtor is going to pay us back $200. So therefore, our inflows of economic benefits will be $200. But if we give them a discount, our inflows of economic benefits are only going to be $195. So what we've got here is we've received less cash, which is an economic benefit, and therefore we've actually got a reduction in inflows of economic benefits. So looking at what's happened here, we've got cash at bank. We've received $195, so that'll be a debit. It's going to make an asset go up. We've been given a discount, so that's going to be an expense. Expenses are debits. And lastly, debtors are going to go down 200. And when a debtor goes down, that's on the credit side, like so. Why was it an expense? Well, there was a reduction in inflows of economic benefits. What was the reduction of? It was less cash being received. There was a decrease in assets, in this case the debtor's asset, and there's an overall decrease in owner's equity. So looking at those two examples side by side and how they're different, they're both expenses but just in different ways. So wages are an outflow of economic benefits in the form of the cash that's been paid. There's a decrease in assets in the form of the cash at bank asset, and there's a decrease in owner's equity. But a discount expense is different. Instead of there being an outflow of economic benefits, we say there's been a reduction in inflows. What's there been a reduction in? There's been less cash received. The asset that's going to decrease in this case isn't going to be cash at bank, it's going to be debtors. However, the overall effect is that owner's equity will go down, so that's what they share in common. Looking at this to enter into a journal, we need to look at how much cash we received, 195, plus the discount of 5 equals the total amount owed by the debtor, which was $200. So we're going to add in a new column to our cash receipts journal, so that's in between the bank column and the debtors column. We've got now what's called a discount expense column. So we put in the relevant details. In bank we'd put 195. Discount would be 5, and that would leave debtors control. The number would be 200. So you can see that the number in the debtors column is made up of the bank column plus the discount expense column. Looking at how to sort of use a different example and how it could be different for the similar transaction, assume a debtor paid $200 off its account. We put 200 in the bank column, no discount, and debtors would go down 200. What about if we gave the same debtor a $10 discount and made them only pay $190? We have $190 in bank, $10 discount, and debtors would go down a total of $200. Third example, the debtor paid $170 and was given a $30 discount. So in bank we'd have $170, discount we'd have $30, and in the debtors column we'd have $200. So we've got 3 examples where the debtor has reduced their account by $200 every time. What's different is each time how much cash has the business received. And in every instance, the total of the bank column plus the discount column must equal the debtors column. At the end of the period, we're going to need to post this column just like all the others. So let's just post our bank column to be thorough. We know that's going to make our cash at bank asset go up, so that'll be a debit. Discount expense, so when an expense goes up, that'll be a debit. And the debtors column, well, that's going to make debtors decrease because that's all the debtors reducing their accounts. It's just going to be with 2 figures this time. So we're going to have one number for the discount expense, 130, and one number for the cash received of 1350. So for our debits, our reference there in the cash ledger is debtors, and same with the discount expense ledger, because that's where we'll find the matching credit. For the debtors ledger, we're going to have two references. $1,350 of these credits will be found in the cash ledger, and $130 will be found in the discount expense ledger. What's a more efficient way of doing this in the debtors ledger is, instead of putting it on separate lines, you can just combine it into one number. And just make sure you get the reference right and put cash/discount expense. That prevents you having to separate the two numbers and performing the calculation of how much cash was received. You can just list it all as $1,480. We've got a little checking mechanism where the bank column must now equal the debtors column less discount column plus sales plus sundries plus GST. So that's for every individual transaction. So you can see we've got a cash sale on March 11th. There's $550 in bank. That's split up over 500 in sales column and 50 in GST. On the 19th, we've got money from a debtor. You can see the bank column's $1,100. That's made up of $1,200 in debtors, but we subtract away the discount column of 100, and that's how we got the $1,100. And lastly, we've got the bank column has $2,000 for a capital contribution, and that's made up of $2,000 in the sundries column. We have a checking mechanism at the end which can help us pick up any mistakes we might have made. So in this case, the bank column must equal 3650, which is the debtors column less discount column, plus the sales column and the sundries column, plus the GST column. So that's a little checking mechanism you can use at any time to make sure your journals are always balancing. A summary of how this journal is posted: the bank column becomes a debit, the discount expense column to debit, the debtors column to credit. Cost of sales column actually requires two entries, a debit and a credit, and the sales column will be a credit. Sundries will be credit. It's either going to be money from a revenue, or it's going to be money from a capital contribution, or from a loan, which is a liability, and they're all going to be credits. And lastly, the GST column, that's the business collecting GST. That'll be a credit as well.